Good morning, everyone. I am Lori Amos with Remax Professionals, Amos Realty Team.
Good morning, Jorge Montoya here with Guild Mortgage.
Good morning, Angie Salcido here with Premier Credit Solutions.
And this morning it is March 6th, and it is time for your money moves for the month of March. We completely decided to go unscripted this morning. We just got on and decided that we're just going to have a conversation about the current market conditions. I think that that is on everybody's mind in one way, shape, or form, whether you currently own a home, whether you're thinking about selling it, if you're just curious about your value, if you're thinking about buying a house, if you're thinking about preparing to start to buy a house or a car or anything like that. I think that the way that the market is right now has a lot of people very uneasy, very unsure. And the three of us being in the business for as long as we have, I myself is 8 years. Jorge, what's it for you?
Geez, 15 years, 15 and a half.
In lending specifically.
In lending, yeah.
And Angie, what about you?
About 9 years in credit repair.
I'm the baby. But I think that all three of us, given the years of experience that we've been in our industry, we've seen a lot of different changes. We've seen a lot of different markets kind of come and go and different waves. And every single time that happens, I mean, I know for me personally, I constantly get asked, like, are you scared? Are you worried? Are you doing okay? And realistically, for me as a real estate agent, it's not about panic or fear. It's about pivoting. It's just about figuring out new ways to manage the new trends that we're experiencing and riding it out until the next one comes, because truly it's consistent. It's constantly changing. Real estate market is constantly changing. So I figured we would talk about that in regards to how it's personally affecting us and our businesses, because it does affect the three of us a little bit differently, right?
Yes.
So I'll start with you, Jorge. I would say let's start with, when was it that you first noticed the biggest shift, and what was that shift?
Ooh, the biggest shift I would say I noticed was last year, March. I was on vacation that turned into working out of a hotel room because that's when the shutdown was beginning. Mm-hmm. So that was a massive shift. And that's when I started noticing fear, like just massive amounts of fear, and then uncertainty. People were no longer sure if they should move forward with the refinance. They weren't sure if they should move forward with the purchase. It was just total fear. And that from there, I really noticed that there was a lot more hesitation, on people making decisions. And then to my surprise, fast forward to end of 2020 and then now 2021, I thought values were going to go down, and then that didn't happen.
Right.
So that was definitely a surprise to me.
Mm-hmm. Okay. What about you, Angie? I'm trying to look at this from a perspective of the clients, the people that we help, right? So I'm trying to think of it as the questions that they would have, like a lot of the common questions that I have. So from your end of it, Angie, what are you, because you get the same I do, I'm sure. I get questions about credit that I, of course, always refer to you. I get questions about lending, which I, of course, refer to Jorge. I'll answer questions if they're on a very, general basis, but I try not to go into too much detail on it, because truly that's not my specialty. Like, I try to stay in my lane, which is real estate. So what are some of the things that you've had, Angie, clients asking you in regards to Jorge's world of lending?
So I went from where people were not working on their credit so much, and then there was just that fear, and they were like, I got to work on my credit. I don't know what's going to happen with the economy. I don't know what's going to happen with my situation, my circumstances. So I just had a lot of people that had a lot of time to work on their credit and just get that started, which was great.
Okay, cool. So it is great. I mean, it's unfortunate that it had to be something like that gave them the the kick in the butt, the confidence, the fear even sometimes will drive people to act. But it's unfortunate that it took something like that to get them to make a move. But whatever it is, the outcome is always going to be positive. So it's still a good thing. What would you say, Jorge, in your business, what would you say is the most common question that you get from people today as of right now?
I get a very loaded question. Jorge, is it a good time to buy a house?
Yeah.
And I mean that. That is such a loaded question, because the honest truth is that it may or may not be, because everybody's finances, everybody's jobs, everybody's circumstances are so different that, like, when I ask this question, I'm like, all right, I got to really respond based to you. because
Right.
my response to you is going to be different to somebody else who maybe is their job's not stable, or they're in an industry that has been massively impacted. And that's the biggest question that I almost get daily.
Mhm.
And I'm so careful with that question, because I never want people walking away saying, dude, you just want me to buy a house.
Right,
That's
right.
not at all who we are, right?
Yeah.
But yeah, that is the question. And the honest answer is, I tell everybody, look, ask yourself two questions. Number one, how's your job? Like, if you think your job is not secure, not stable, let's not continue this conversation. It's just not your time right now. And that's okay, because things change. And then number two, can you afford these payments? Like, I'm not gonna like sugarcoat it. Like, we know where the market is at. The market has risen. I always refer to our area as the hot new girl. Like, everybody
It is.
wants her.
It really
We
is.
are the hot new girl here in
Yeah.
Reno.
But see, and the
No?
thing about that, I would say on my end, I get the same question a lot. I really, really do. I get that, and are we in a bubble? That's been going on for several years now. But I answer the question the same way. It's not about whether the market is right for you to buy. It's whether you are ready to buy in this market, or any market for that matter. It's a very specific question, but the way that I have addressed that in a lot of situations is like the comment that you made about the prices being what they are right now and whether or not you can afford that mortgage payment. The reality is that so has rent. Rent has significantly raised as well. And so a lot of people exactly. So a lot of people are either going to pay this high amount of rent, or they're going to pay a higher mortgage payment. But in all reality, because of the way that the rates have gone, it doesn't always equate to a higher mortgage payment. Sometimes they're right here. They're paying the mortgage payment that they were paying on a 2-bedroom apartment. And that's truth. So
can I elaborate on that? Because I've had a lot of clients that are working on their credit, and guess what? They call me and they get a 30-day notice because their owner of the property is selling, the home, because it's a seller's market.
yeah.
So they're frantic and they have to move, and they're like, what can I do to get my credit up fast? I want to jump in. I don't know if the rates are going to go up, So Jorge, I wanted to ask you that question. Do you feel that the rates are going to go up anytime soon?
Great question. And before I even answer that, let me put a little bit of context behind this. So I have seen 9% rates and 8% rates and 6% rate, and people were happy. They're like, oh, I got 8%, what a deal.
Yeah.
So I mentioned that because we have been living a moment in time where we've been spoiled with this amazing opportunity of getting interest rates below 3%. And the last time I saw anything near this was back in 2011. So a decade ago. So this doesn't happen all the time. And naturally, rates cannot stay where they're at. So to answer your question now is, yes, rates are already starting to come back up. And this is where people panic. And it's like, you can't panic. Like, if the rate was 2.6 and then now the rate went up to 3, that's still really good.
Right.
You are not paying 8%, which I have had, right? So yes, naturally we have to have a balance, right? And then there's different factors that affect interest rates, but the short answer is yes, we have already started seeing a little bit of shifting upwards. And towards the end of the year, who knows, right? Because it's all a forecast, maybe 3.5, 3.7, maybe that's the new normal. But listen to this. This is still really good. And I think that people just get freaked out by that. You're not paying crazy rates to be able to secure a mortgage under 4% is pretty dang good, considering it's a long-term rate.
Yeah, I agree with that 100%. I think that another really important point that I try to make to people when they have the concern about whether or not we're in a bubble or if there's going to be another huge market crash, I think the thing that a lot of people don't understand or tend to forget because some time has passed is the reason that the market crashed, right? The market didn't crash because home values dropped. The market crashed because their rates went up and their payments went up and they couldn't afford to make their monthly payments. So when I have this conversation with people, I put it back into perspective of this. So if you were a renter and you're a homeowner and you lose your job and you can no longer make your house payment, whether that's rent or mortgage payment, right? Are you going to be able to stay there for free because your landlord's going to let you? You're going to be in the same position anyway. It's not about whether or not what's going to happen when you lose your job, because if you lose your job and you lose your income, you're in a tough situation no matter what, whether you own or you rent, right? I will say this too, and maybe some people disagree with me, but if you're renting versus you owning a home, you actually have a lot more options for resources and assistance when you're a homeowner than you do when you're a tenant. You get that eviction notice, that's it, you're out, you're done. So that's the number one. Is a lot of people, like Angie mentioned, getting those 30-day notices. That's not going to happen if you're a homeowner. If you want to move, you're going to move, but nobody's going to come knock on your door and tell you have to, unless you don't pay your mortgage payment or your HOA. Yes. That's a totally different story. But then the other part of it is not just the eviction notice that Angie mentioned, it's also the increase in rent. Somebody knocking on your door, handing you a letter telling you in 30 days your rent is going up by $300 or $400 a month. Again, that's not going to happen if you're a homeowner. So I always refer back to this versus this. And so there's a lot of fear out there with people because they just don't know that. They just don't understand it, or they just never really put it into that context to be able to compare the two and say, okay, wait a minute. Realistically speaking, if I lost my income today, I'd be in a tough spot too. So would both of you, right? Yeah. So it's not so much about that. It's about thinking about the long-term aspect of it. And I'm with you as far as the rates are concerned. I think that they're phenomenal right now. I was one of those people that had a 7 point, I don't remember what it was, and was like, woohoo, 7%.
You were happy.
Yeah.
5.25.
Yes.
Yeah. But then you talk to people like our parents, and they're telling us that they bought when it was 14%, 16%. 18%. So that's another thing that a lot of people don't understand is I have these conversations with people that are saying, well, I looked at this house and it sold 5 years ago for $180,000, but now they're trying to sell it for $300,000. First of all, value is always going to go up. My parents bought the home I lived in as a child for, I want to say $60,000 or $80,000. That house is probably worth about $750 now, right? That's just life. That is just reality. So you can't really look at those types of things and try to apply them to today, because today is not the same as last year, is not the same as 5 years ago.
Cost of living changes. Yep.
It does. It really, really does. So I think that a lot of the questions and things that we've been getting are along the same lines.
I like me and Jorge did a class a while ago, probably about 5 years ago. And we took our renters, because we had a lot of renters in that class, and we asked them a question. We were like, simple question, how much are you paying in rent? Mm-hmm. How long have you been renting? And then they did those figures, and they were like, oh my gosh, I could have been putting that into a house. Mm-hmm. And I tell my clients that all the time. I use that example. Mm-hmm. Thanks, Jorge, by the way. And just let them know, like, you're investing in your future. You never lose money in real estate that I've seen. Yeah. And the reason why the market crashed was because of those ARM loans. Do you remember those, Jorge? Because the ARM loans were going based off of, I used to do loan modification. So I worked with a lot of clients that had those ARM loans, and that was where the rate was at a certain interest rate, and then it climbed based off of the market. So that's a part of the market crash. I moved here from San Diego when that happened. So.
Yeah, that's what I was saying earlier, is that's a significant reason why the market crashed. It didn't have to do with the fact that the value dropped. It had to do with the fact that they couldn't afford their monthly payments anymore. Right. I was in that same category back in 2009, I believe it was. We bought our house for somewhere around $275, I think. And within 6 months, I would say somewhere around there, it was $90,000 value. But what didn't change at that point was our mortgage payment. So although our value was completely upside down, we were just dead in the red, we could still afford to pay our payment. So what we ended up doing is we just wrote it out. We literally just wrote it out. At one point it was set to adjust, and we were able to get the modification. Thank God. It took us like 3 years, but we were able to do it. So we never lost that property. And in the long term, we ended up keeping it for an additional, I want to say 10 years or so, 12 years maybe. And then eventually did sell it, and we walked away with a profit. So that's the thing, is it's with the market going up, down, reality is that no matter what the market is doing, when you make your monthly payment, you're chipping away. You're chipping
Yeah.
away at that. So as the market goes up, down, your value is eventually going to correct no matter what. You know what I mean?
Yes.
So it might take you longer to hold on to it, which is what we had to do. But at the end of the day, we still sold it and made a profit. So, you know, that's not a bad thing. And then the other thing too is with back to what I was saying about, you know, I saw they bought this house that long ago and it was this price and now they're trying to sell it for this. Well, realistically speaking, isn't that the whole goal? If you bought a house, and I say this, if you bought a house and your value increased by $150,000 in X amount of time, wouldn't you want to, you know, sell it for market value? Or are you going to think to yourself, oh wait, I only bought this for 150, I'm going to cut everybody some slack and sell it for, you know, 180 or whatever it may be, you know? So anybody, that is the whole point of obtaining real estate, at least to a degree. I mean, obviously to have a home and those reasons, but the whole reason to have the ownership end of it is to reap the benefits of it at some point in the future.
Definitely. And that's been one big differentiator in the last decade. Lending has changed so much that we don't have a lot of lurking risky loans that are about to reset. And that's one big key thing that people forget about. So I'm glad you guys brought that up because it's true. Right now in the last decade, the riskiest, and I say riskiest, and the only reason I say risky is because it just comes with a higher payment. The riskiest loan that I've seen from our company in the last decade has been probably a 15-year fixed or a 10-year fixed. And the only reason I even throw the word risk is because you're cutting the loan in such a short term that your payments are higher. But it's on purpose. It's like you're trying to pay the home off fast.
Right,
you know?
right. I've seen a lot of people doing that as well.
Yeah, which is a great thing. It's like the end date, like no more rent or mortgage as of this date.
Yeah,
you know?
absolutely.
Yeah.
I would say lastly for me is just the competitiveness of the market. And I'm sure that you guys are seeing that as well. It's honestly, it's very competitive, and it can be a little bit disheartening and frustrating for especially the first time buyers that maybe don't have a lot of cash, those FHA buyers. It's a struggle. It really is, but struggle does not mean impossible. So, you know, there's ways that you can kind of offer up on this end, meaning like, you know, switch up your terms as opposed to it always being about the purchase price. So there's a lot of different things that people can do. And I know, at least for me in real estate, I've seen a lot of people kind of thinking outside the box in my industry to try to help their clients. And so I'm not going to say what they are because some of them are my own personal little tricks and I'm not trying to give to everybody, but you do really, as a realtor, you have to work harder. You just have to think outside the box, whether it be the way that you're writing the offer, the terms that you're offering, the conditions that you're including or excluding, the type of properties that you're looking at for your clients, where you're looking at properties for your clients. It really has forced me, and this has happened to me in previous markets as well, to really think outside the box, dig deeper, because if I want to have success for my clients, you kind of have to. You really do.
Absolutely.
Anything else you guys want to add in before
as far as the competitiveness?
Well, either competitiveness, anything you want. Whatever.
Yeah.
I mean, a lot of realtors right now are searching for inventory. I think we're just in this major like inventory loss, and nobody has the inventory right now. But so what do you think about that? Are they is it gonna get fixed?
I mean, I think eventually it will correct. Honestly, the timeline on that, who knows? You know what I mean? All of these new bills are certainly helpful, but the rate at the building end is not keeping up with our growth side of it. And so on that end of it, do I see an end to companies moving to Nevada and bringing all of their employees here, people leaving California, coming here? And realistically, I'm going to touch on this as well. A lot of the times I hear people saying, all these people coming from California, which is true. There is a lot of people coming here from California, but there's also a lot of people coming here from Washington and Oregon and Texas and
Texas,
Hawaii. I have had people moving
Arizona
over. Yeah, Texas. I think I already said Texas. Everywhere, truly. And so I do not see that changing at any time soon. I really, truly don't. Unfortunately, it's so I think eventually the inventory will catch up, but I do not see that happening anytime soon. But who knows? I mean, I can't tell the future. Who knows? But from what I'm seeing, as far as the way that it's so tipped, I just don't see it correcting quickly.
Yeah, and here's what I would add to that, because I agree. Like, our industry is such a cyclical industry.
Mhm.
And right now we're just in this cycle that's painful and not fun and frustrating because of inventory. But this will change eventually.
Right.
And this kind of connects with a lesson, just a personal lesson, which is time. Like there's only one undefeated champion of the world, and that is time. And you can't beat time,
Mhm.
but you're either prepared for the time or not. So anybody that's out there, right, look, trying to buy, don't freak out. Stay approved. If your intention is to buy, stay approved, whether you buy now or in 4 months or in 6 months, or I mean, I got 9-month-old babies. We're doing this a long time, okay? So we got time.
Yeah.
But my point with that is you're never going to beat the market. Time is undefeated. However, there is a time when if you're not prepared, then that's when you're going to lose, right? So when this shifts, like most of the time when these shifts happen, like you realize it after it's already happened.
Mhm.
So if you just stay prepared and eventually this shifts and then opportunity will be there for you.
Yeah. Yeah, I agree. I do definitely see a lot of people hesitate and then kick themselves for it later. But I'm a big advocate as well of, the timing has to be right for you.
Yes,
It's
for
all
sure.
about your situation, your circumstances, your needs. So, I just tell people no matter what, no matter when, just make sure that you're making a decision that works for you today, right now, and that you can see and that you figure in the future based on things that are in your life at the moment, as long as nothing gets switched up again. Nobody can anticipate a job loss or something like that. But as long as you're not overextending yourself, I guess that's probably the best way to say it is as long as you're not overextending yourself, that you're going to be okay. There's a lot of fear involved in purchasing a house, and I understand that. I've been there myself. But realistically speaking, there are extremely few people, in fact, maybe one or two that I can think of in my entire career of 8 years that have kind of, not, I don't want to say regretted, but second guessed themselves after the fact. Most of the people that I work with are like, oh my God, why didn't I do that sooner? Or, oh my God, I'm so glad I did this, or I'm so proud of myself, or whatever it may be. I have to say really quick, guys, that I just got the little notification that we're about out of time. I think it only gives us like 45. So is there anything else that you guys want to conclude with? Let's do it this way. Jorge, if you had one little piece of advice to give to a prospective client, what would that be for you?
Piece of advice that I would give anybody would be, don't try to beat the market. The market is undefeated. You're not going to beat it, right? It's not possible. But if housing is your desire, your goal, get in as soon as you can, as long as the numbers work for you, and hang on long term. Because really, housing, we lived through a moment where like it was a quick get rich quick scheme, like buy and flip and buy and flip and buy and flip. And like that can happen sometimes, but that's not the normal. Housing is great. I believe it. I own it, right? But it's a long-term play. And if you go into it thinking long-term play, then that's, I believe, the right mentality. And then you'll get what you want.
Right. Agree. Angie, what about you? What would be one piece of advice that you would give to a prospective client?
A lot of my clients put credit out of mind, out of sight. Not in this market. Please work on your credit. Credit is very important. I mean, I know that we all get busy, but it's a very good asset to have a high credit score. You get better interest rates. I would just say, work on your credit.
Yeah. And really that kind of ties into what Jorge was saying, which is stay prepared, stay ready. Because I have a lot of people too that I refer to you guys over at Premier, and it's like almost like an afterthought. And what they don't realize is that the work that you do today is going to pay off for you 3 months from now, 6 months from now, 9 months from now, a year from now. It's not something in I'm not going to say in everybody's case, some people's case, it can happen that quick, 30 days, 45 days. But I think, at least from my experience, the majority of the people that we refer over to you guys for assistance with that, it's usually more like in the 3 to 6 month range. So if they're not thinking ahead, when the moment comes right now where they get a 30-day notice on their door, if their credit isn't at a position for them to be able to have options, true options, not just go rent another place, then they're kind of stuck. So I 100% agree with you, Angie. I think that it is imperative for people to always have that top of the mind. And even for people who, you know, maybe are already at that point, but there's always room to improve still. That's my opinion of credit is
right. Like refinance or something like that. You know, the rates are low. Yeah. So
exactly. Yeah, for sure.
take advantage of the rates right now.
Sure, for sure.
Right, Jorge?
Yes.
Yeah,
Indeed.
well, we've only got a couple minutes remaining, guys. So if you guys are all good, I think that's a wrap for today.
Well, I just want to say thank you for joining us. And I think this is a great session. And hopefully you learned a lot from this and
sure.
have a great weekend.
Yeah, our contact information, I'll put it on the post, you guys. So if they want to reach out to one of us individually, they can do so. And you guys enjoy the rest of your weekend. Talk to you soon.
All right, guys. See you soon.
Bye.